Interestingly enough, $17 a share. Krispy Kreme has just begun its first day of trade. The donut chain is on a sugar high, up 19% as we head into this interview. Wow, that makes its second run at going public since delisting back in 2016. Joining me live from the NASDAQ, Krispy Kreme CEO and President Mike Tattersfield. Mike, sugar high, you got to be on a sugar high with this investor response, a gain of 19% right now, but priced at $17. Shares were priced below the, $21 to $24 level when terms had been announced last month. Did you leave money on the table here?
Think about it. It's a great day for Krispy Kreme. It's an 84-year-old brand, and we're becoming a public company again. So we're really able to do that because the work that the team did in the last 5 years, building and transforming the brand, the culture, and fundamentally changing the business models. So we actually do fresh donuts. That's what we focus on, to where the customers are. And we use these amazing Hot Light Theater shops, as you know, the one we have in the flagship in Times Square. So think about that production there. You take that to where the customers are, and you really build a great business. That focus over the past 5 years, we've doubled the revenue, doubled EBITDA. And so when you think about when we have that discussion with our investor base and they see the growth there and they see how this omni-channel model is working, we're in this for the long journey. The journey that we've done over the past 5 years, we bought the company at $1 billion. And as you roll up today, it's 3 times value, right? So you can see the growth there, and we're really into the journey. And it's a really high quality investor base that's with us, and they see the potential in the U.S. as well as the globe.
What amazes me is the 4th of July donuts here. I'm holding up a box of them, and what you guys are now starting to do, which Krispy Kreme kind of years ago when I covered them did not do before, were themed donuts. You know, what has this done for the business, especially considering, and this amazed me, you guys have had the highest sales during the pandemic year.
We did. So you hit on a really interesting point. We have about a 2.5 time incidence ratio, right? Where guests visit us 2.5 times a year. We grew that 20% last year. What's really interesting is we have focused the business on occasions and dozens. So it's really, and we do that because people share our donuts. And they gift them as well. So when you drive the innovation around the dozens, around occasions, whether it's 4th of July, whether it's Mother's Day, we also start building a gifting business. And in case you didn't know, about 1/3 of our dozens business is actually gifted. So our customers are used to that. That shift to occasions really works. And we learned it really works globally, right? Because you have an accessible price point that people use for celebration and birthdays too. And now we can just, what we've done is starting to really focus on the donut shops, and then we make them there, then get them to access points where customers are. That's the difference. Very different model.
I saw this headline. Mike, I saw this headline reading in a couple of days beforehand that said Wall Street might not have an appetite for a sugary-focused company at a time when clean eating is so big. You know, we look at Beyond Meat, Impossible Foods, and all of the health-driven moves right now, whether it's Sprouts, Whole Foods, Amazon buying Whole Foods, and yet you have defied those headlines. But on a longer-term basis, Sweetgreen is going to go public. If an investor can only choose between Sweetgreen stock and Krispy Kreme stock, how are you going to keep investors like the ones watching right now invested in you?
So if you think about it, customers are always looking for a sweet treat. That we know. They just want to make sure it's worth it. What our model is, it's pretty unique. We don't really focus on the individual single-serve sweet treat occasion. We focus on the dozens. So that whole model where people gift donuts, share the donuts, celebrate with the donuts. In fact, we compete with flowers at times on Mother's Day, right? So you can start to gift the business.
Right.
It's a different model, right? So it's beyond just the food piece. People want to connect with the brand. We'll continue to focus on what we do well, which is donuts. And we've seen, again, we grew at 20% from 19 to 20, just on focusing on those occasions.
You know, your operating income did slip rather dramatically because you're trying to reabsorb a lot of the franchises of Krispy Kremes. What's behind that focus and that strategy?
So think about it. When I said that whole transformation with the brand and the culture and the business model, the franchise system, there's a franchise system in the U.S. You had a franchisor-franchisee relationship. The majority of franchisees were small franchisees, 1 or 2 shops, that really owned a lot of the development rights or the capacity in the largest metropolitan cities in the United States and not necessarily developing. So as we started to really transform the company, we took a controlling stake in the majority of the franchisees. Today it's about 85% controlled today by us. And what it allows us is that's where the donuts are produced. So think of us now as a branded donut company where we make these amazing donuts inside of our theater shops, which you know you can walk in and see, either get them hot with the hot light or see them through the glaze line, and then build the model to how do you get them to customers, whether you're going to do it at a fresh shop where you deliver fresh donuts there once or twice a day, the e-commerce delivery model, which is significantly growing, and we also deliver fresh donuts daily to the wholesale chain of select grocers, select convenience shops, daily fresh. So that same donut experience is the same. And that's a big shift in the model.
Okay. Well, this donut experience right here is going to probably disappear due to a few tiny human mice that are upstairs, named my children. Thank you very much.
As long as you share it, right? If you do exactly how we think about it, right? Those occasions it shares, they'll be going, thanks, Mom. So I'm sure you'll appreciate it.
Mike, good to see you. Your stock up 19.25% right now as we speak and climbing. Thank you very much, and we'll be speaking to you soon.
Really appreciate it, and I thank all the Krispy Kremers that do just an incredible job. Really good to connect again, Liz. Appreciate it.